Hi everyone, welcome to Wednesday. It's the 5th of March. It's obviously day 6 of the war in Iran. There's no other way of calling it, is it really? It's a war that's going on in Iran, Israel, and the US with their massive barrages of missiles and firepower, completely controlling the airspace now. And yesterday, Dan Kane, the head of the Joint Secretaries of, was he head of the Joint, what they called? I can't remember. Joints, something or other. Very senior general talking about him moving further into Iran and further targets. Obviously, the spat between Trump and Keir Starmer about using Chagos to land their massive B-52s and B-2 bombers is all about getting access to the underground, getting enough air power in the air to bomb the underground missile launching sites, which is the stated aim of the administration. So onward it goes. We had a big bounce yesterday. This is the next to me here. This is the S&P 500, the world's most important stock market, and you saw the move we had on. There was Friday's close down here. We moved up on Monday, having gone all the way down. Obviously, Tuesday was a major panic, and we went into that 6,700 area. Yesterday, we reversed that again, and we closed positively. The S&P was up 0.78 of 1% at 6869. The Nasdaq once again was the best performer because a lot of the tech chiefs were meeting with the president in Washington and came out there very bullish with regard to the data center rollout, the power infrastructure that's needed to be significantly upgraded in the United States. So companies like Coinbase were up 14% following a big upgrade. Robinhood was up 8%. Moderna, the drugs company, they were up 15%. So some significant moves yesterday. Today, we're back down again. So obviously, we're still an hour ahead of the cash session. But, technically, we remain under the 20-day moving average here on the S&P. The Dow, the big industrials complexes, the 30 big industrial companies in the US, been under its 30-day moving average for best part of 2 weeks now, and we're down the low end of its range. So there is some disparity between the major US indices. So the Dow was it up yesterday? We were up, but only less than 0.5% yesterday. The Nasdaq was the outperformer on the big tech front. So the Nasdaq 100, which we show here, also big engulfing candle, taking out the hiatus of earlier in the week, and back over the key 25,000 was a big line in the sand, literally, as we can see here, and we're back to about 25,000 now. So also a down day on the Nasdaq. That is just burst above its 20-day moving average, but it's done that a couple of days before and come back down. So we're still biased to the downside, I'd argue, on the higher time frames. Don't get too carried away. One day doesn't make a rally, as they say, but the general trend is drifting lower. And the downside is, so we said, we've been saying all week, this intraday low that we went to yesterday, but that was an ending day low at this 24,300 zone here on the Nasdaq 100. So, guys, let me know what you're trading, how you're trading, what assets you're interested in, and we can have a look at them all together. Different setups. If you're completely indicator free trader, purely trading the price action, we can have a look at all that together if you like. So let me know what swings your boat or floats your boat, as you say. So stocks generally low today. Here in Europe, the DAX is at 24,140. Again, big. Not big, but a significant bounce yesterday. But we remained under this, what is now clearly a key of a bit of a pivot area where Trump started speaking back in Davos in January. And you see the low here, this 24,300 area. And we were under that yesterday, having crashed through it. on Tuesday, down Monday, big gap on Friday's close to Monday's open, and was much lower, finding support at 24,000 on Tuesday. And again, yesterday we rallied off 24,000. We're currently trading, as I said, 24,150 on the German Nasdaq, the German DAX 40. Germany's biggest companies represented in this chart here. Actually, just get my wee head a bit smaller. Right. The major news today is the weekly unemployment claims. I've just finished off with the FTSE. FTSE, very similar to the DAX. Big down day Tuesday, bounced yesterday and down again today. In Asia, we obviously had that massive shakeout, particularly in South Korea the other day, 12% down and then down again. I'll bounce a wee bit yesterday, but down again today. Nikkei also down again today into close. And just to finish off, Australia, similar patterns, only moving even lower here in Australia. So next support for the Aussie 200 is there at 8,800. We're currently trading at 8,880. All the eights, 8,888. All the eights. I don't know, maybe you actually trade that, but it's like any other asset, any other chart. Follow the rules, play it all out. So that one, again, using our mean reverting strategy there, would have been short. Actually, there on Thursday, interestingly, got you ahead of that massive turn down. It mightn't have been as dramatic as that. This wouldn't have been as dramatic as this until Friday close, but certainly you would have had some indicator that we were running out of steam on Thursday. Even though we'd had an up day, it might have been it probably wasn't enough on Thursday. I'm interested what that looked like actually on the close on Thursday. But certainly, don't be afraid to enter when you've had such a move like that on the close there on Friday, and then down we went. Sorry, that wasn't Friday, that was Monday, wasn't it? The 3rd. Yesterday, a wee bounce, but testing the lows from Tuesday. And then down again today, Thursday. So anyway, that's the stock markets. Let's just have a look at where we are elsewhere. I'll just bring in the calendar. Just about to go across the screen now. The weekly claims. Remember, it's been remarkably solid numbers out of the weekly claims and the continuing claims and the 4-week average as well. Where are we? That was yesterday. I'll come back to services PMI off because I put there. Hang on, let me just change the filter on this. Don't need all these. Actually, I will leave these low impact ones on because there's lots of other feeding data. So that was yesterday. Services PMI is better than expected in the US as well. As we saw, prices. Sorry, it's manufacturing on Monday, wasn't it? Better than expected, but prices are really spiking up. The services one yesterday out of the US was better than expected, 56.1, quite a significant beat. So, signs that the US economy continues to trundle along and being remarkably resilient. PMI services, by far the biggest sector of the economy. So that's good news for the administration and the US economy. So unemployment claims, 213,000 this week, still remarkably low, 213,000 from 212,000 last week. Import prices not moving either. That's also quite interesting. Productivity ticking higher. Labour unit cost again ticking higher. So again, see this one here, preliminary unit labour cost. Again, a suggestion of potential feed through to inflation if unit labour costs are going. Obviously, the key thing is here, you can see by the start here is that this is all late. It's 2 weeks late, 15 days. I think this one's even later, isn't it? 28 days, yeah, I thought it was. So productivity in non-farm roles and unit labour costs a month late, but again, showing that spikiness of the inflation and the stickiness of the inflation. There was talk of it going negative last month. Let's just have a look at this chart here. You can see. So this is unit labour costs in the US. So it's again starting to tick up. So this argument that we have about those that have got jobs are doing okay, those that are trying to find jobs are struggling. But the key roles are not getting filled, or those that are in them when are churning are not getting the big uplifts in wages they had seen previously. So unit cut, but the contrary to that is this: your labour cost charges going higher. So we were lower last month, but this month, given the delay of the data, is significantly higher than expected at 2.8%. So it's not as bad as it has been, but it's ticked back up from what was looking like a potential move to the downside. So again, I'm all in the mix on the labour market, and that's really what the members of the Fed are obviously scratching their head about. Obviously, that's all being overtaken by what's going on in the Middle East at the moment. So again, resilient jobs market. 213 is quite a low one. And under that, just over that 200,000 level. So again, another positive, along with yesterday's ISM services PMI. That's another very decent tick in the data box for the US economy. My query would be this labour cost charge and the challenger job cuts as well. That's interesting as well. It's a negative 71%. So yeah, it's hence the focus on the labour market rather than inflation from the members of the Fed. But obviously, all of that is very much on the back burner, and the unknown of what's going on in Iran and the impact on the US economy continues to hang. Speech from Miss Lagarde later on, 5:00, and Michelle Bowman, one of the deputy chairs of the Fed, also later on. So there could be, if you're trading either the euro or dollar, or there may be something that these two ladies have to say separately that spikes that. And then later on tonight, Goolsbee, a new member of the Fed, new voting member of the Fed, bit of a dove with a speech at midnight my time to kick off Friday's data. Obviously, the main data is the PMIs tomorrow, and US, less so US retail sales, but more on that tomorrow. So let's have a look what's happened on that. Not that that's really going to have moved markets somewhat, but let's have a look at some markets while we're here. So we had a look at the indices. Let's start at the top. Crypto, remarkable run, 72,300. We had that break of 70,000 yesterday. Big positive day yesterday. And as I said yesterday, we'd like to have seen this, close significantly above the 70,000, and it has. What's really attracted me to this last night was the fact that we have closed above 70,000 more than we had done all of this channel bound. Every time we tested it, we've come back on the day, and the big down candle now has been somewhat vanquished. So if we just look at that, so the big downtrend, the end of the downtrend here at the beginning of February, and the sideways action for the last month has vanquished. Is a bit of an overstatement, perhaps, and perhaps not appropriate given what's going on at the moment. But the point I'm trying to make here is that the close last night was above the close of this day here when we were still downtrend, and above the opening of this big down day here on the 5th of February. So whether it's just a simple, monthly balance flip so for some big players or not, I don't know, but that's enough to have attracted me last night. And I went long on with a very small risk actually on crypto last night, looking for 75,000 initially. And then the next level would be this 50% fib level of the down trend, which sits at 79,700. I had two upside targets on Bitcoin, but obviously we need to hold 70,000. So that trend line was blistered, and we've got a very flat wedge now. Move that forward, it's very flat. It's like might all be obviously related to what's going on in the wider world. So looking for 75,000, and then the 50 fib level there at 78,000 700 is my next upside target on crypto. On Bitcoin itself. As we got the stock markets rallying, the dollar rallying yesterday, the oil market came down during the day, but then still finished the day higher. It's the daily time frame, remember? And then we've gone higher again today. So there was a bit of not exuberance is the wrong word, but there was a bit of positivity yesterday morning that the intervention from Trump saying, we will guarantee tankers through the Straits of Hormuz. Obviously, the market thought, well, how can you really guarantee that, given it's such a small passage, and you need to stop the Iranians dropping their mines. So that's another target of the US, actually trying to target the mines that are in factories within Iran before they get deployed into the Strait of Hormuz, because it's much more difficult to get them out of the water than destroying them in the factory where they're all together in one place. So market's not convinced of that. So we moved down here into sub $74 for the WTI, but we're now back to $77. Brent had exactly the same pattern of movement, congestion at high technically here on this 1 hour chart, and this morning we've been as high as just shy of $85 on Brent. Let me just put that in as a key line, just bear with me while I stick that in. There's $85. I should put it in the other day too, which is where we got to on the immediate aftermath on Monday. So we're back to 85 today. Drifted a bit now, 83.50, so we're going up a whole $1.50, but we're still congesting at high as $85 on Brent. Forex dollar remains so it's holding on to its safe haven status. We look at the euro, 116 we're back to again, and it's a key support area, saying for the last couple of days. Can't drift away, can't get above 16.50, and we're back to 16, so 50 pip range. It's not even 50 pip range yesterday and today on the or since yesterday on the euro. So 116 key support area if it holds. But if we look at the daily time frame, the positivity of the dollar still outweighs this week, and obviously we went as low as we said yesterday, 15.30 on Tuesday. We're back to 16 at the moment, but the trend remains to the downside, and so it is against all the major dollar crosses. Yen 157, stalling again ahead of the 158 area, but to a 157.70 now. So 158 is the big line in the sand that we've been saying for a while. This obviously this blob we put on yonks ago, didn't we? Back in November. What was it through here? I think it was here, wasn't it? Middle of January, with the 158 zone. So dollar still bid against the yen. Swissy 78 to the downside. So dollar still holding the uptick we saw on Monday. 79 looks like a step too far at the moment, but it's still dollar positive. Dollar CAD continues to slide sideways. The loonie sort of having the better of things really this week. Having rejected 137.50, we're now at 136.40 under the 137 handle for Kiwi for CAD. So CAD's holding its own against the dollar. Euro just seen it was weaker. Aussie 70.25 down again today, having having rotated higher. Down from .71, but holding significantly above the .70 support area. And 70.25 seems to be where the buyers are for the Australian dollar against the US dollar, and that was pre the war as well. So significant, obviously, buying going on at that level. So if you want to try and play that channel, that will give way at some point. But at the moment, this week, 70.25 has held as a support area. But again, even the Aussie, that's had a really, really good run against the dollar, is in its under half of the Bollinger Band now, congesting or consolidating at high. Sterling 33.50, so 150 points away from the key 135 area for sterling. I'm reading something about sterling today. Oh, it's today in 1976. So the 5th of September, 5th of March, 1976, which is exactly, what's that? That's exactly 60 years ago. Is that right? 76 or 50 years ago? 50 years ago. Sterling went under $2 for the very first time. 5th of March, 1976. I'm full of this rubbish, aren't I? So the 5th of March, 1976, when punk rock was about to explode in the UK, the dollar cable rate went under $2, two, which is way off this chart, obviously. So in 1976, we first went under this level, two. For the very first time, sterling had been way above that for a long time. So, dollars had a really good run the last 50 years. But anyway, there we go. 5th of March, 1976, first time the dollar sterling traded under 2 against the US dollar. Today, as I said, 133.40, a downtrend still in play. And we sort of got buys at 33.40, but don't rule out these wicks, my friends. We've tested low and we've bought back, but that's looking like it may be ticking up. But the bodies of the candles are a bit indecisive at the moment. But we're still very much down, still very much under the key 135 area, and the 20-day moving average is still above the 135 area. So the higher time frame trend is to the downside. So when you're trying to buy this, just be careful you're against the higher time frame trend now. Kiwi back to $1.58, where it's found some buyers this week, and we're within 10 pips of it again today. So again, another one that's not recovering from the shock of the weekend. Understandably, dollar safe haven bid is in place, and the data coming out of the US being relatively strong, particularly those PMI data this week. There's still, as I said earlier, still signs of sticky inflation, but the US maybe, all that flow out, maybe looking to take flows back. Obviously, a lot of it depends on how this war transpires and how much, both the political impact of dead US soldiers, airmen, naval members getting flown home, sort of a big of an impact that has politically. But comment going very well, Trump said last night. His press secretary, complete dominance of the airspace, she said very aggressively last night. And then, as I say, a really good meeting as far as Trump's concerned. Obviously, everything's really good, isn't it, in Trump world? Meeting with the tech gurus at the White House yesterday. Data center pledges all over the place, and as I say, stock markets, particularly the Nasdaq, benefited up 1.29% yesterday. So the Kiwi and the dollar remains on the front foot, and it's finished with the Kiwi here, just holding 59. We started within the season. Let's have a look at gold and silver. 5,125 remains a bit of a support area from Tuesday's drawdown on the third there, but the 20, the one I'm watching really is this 20-day moving average, the midline of the Bollinger Band holding on Tuesday. We moved a bit higher yesterday. We opened quite strongly this morning, but we've come back and given a lot of that up. So I don't know if anybody's trading gold at the moment, but we were down in the last hour or so, and there's Tuesday's big move down, and we've gone sideways since, basically. So 5,125, bit of a support area, just sort of poking under that now as we come into 40 minutes ahead of the US Open. So there we go. Obviously, all eyes, as I say, on Washington and what the president's got to say, principally. Obviously, Defense Secretary Hegseth, new stuff out of the Pentagon from the actual soldiers themselves and the naval personnel. But I say, US data this week, putting that to a side if you can, has been relatively positive so far. So let's see what non-farm payrolls look like tomorrow, see what the impact's like on the markets this first week of the war. Day 6 today. pray for those people, those innocents, inevitably caught up in it wherever they are in the world, whether it's in Iran, whether it's whether it's in the Gulf, whether it's in the wider region. It's not good for sentiment. It's not good for world peace, obviously, and it's not good for our getting on with other people in other parts of the world. But anyway, and the legalities continue to be questioned of the war. I mean, the thing that Congress voted for yesterday, though, having said that, they basically give him the okay that he Trump that what he did was okay so far. Lots of obviously objections from the Democrats, but no pushback, particularly from his own party, as you might expect, unfortunately. But very conflicted news and lines coming out from Rubio and Trump from day to day about what's gone on, what's not going on, what there really are the aims of this war. Is it regime change, or is it get rid of all their missiles, make sure they don't have a nuclear weapon? Because we're the US and you're Iranians, and you can't have a nuclear weapon or a nuclear power setup. And what sort of replacement regime are they going to get in place, or replacement politicians? It could get very, very divided, very, very bitter within Iran as well. So, difficult times ahead, obviously. So stay safe, everyone. I'll see you tomorrow for non-farm payroll. Until then, be good, and may the pips be with you as ever, and see you tomorrow.